Hi, everybody. I'm Pat Love with eXp Realty. I am here today with Manny Treivish. He's a mortgage broker. Manny and I have known each other for about a year and a half now. He's in one of my networking groups, and I'd like to feature him today. So let's get started. Manny, welcome.
Hello, Pat. Thank you for the invite. Lovely to be here.
You're welcome. It's nice to see you today. It's a beautiful sunny day, but we're expecting snow tomorrow, so I guess it's a good time to get things done. So, Manny, I'd like you to explain to our viewers exactly what a mortgage broker does.
In a minute, an hour, or a day?
I told you earlier. Briefly describe,
Briefly.
please.
So, mortgage broker is the person that is just going to do the legwork for the client and go and compare those rates. So we all know that um, options are important, and to get a few quotes is also important, right? You don't go to the first plumber that gave you a quote that is overpriced. You want to compare a few sources. Same thing goes with lending, whether it's a debt consolidation, or it's a mortgage on a new purchase, or it's an investment. You want to compare the rates, and you want to compare the different product features. So you do want to compare the rates between the different lenders, and you want to compare the different features that every lender product is giving you. And typically what people had to go is to bring all their documents and all their bits of pieces of paper and go into every branch, right? You go to TD, then you go to RBC, then you go to Scotia, and you have to sit in every branch. You have to sit for like 2-3 hours while they're filling the application, and you have to start managing the communication with them and so on. The mortgage broker basically takes all that time and all that legwork out of the equation, and what we do is we do it for you. So we get updates on a daily basis of what's the current rates, what the market is doing, where is it headed, um, and we do all that shopping for you. The other aspect is that when you go to your branch of your, you know, favorite lender that you've been banking with for the last, I don't know, 20, 30 years, they will do the best that they can for you. Like, I have no doubt in that. I never vilify other banks because, there's a representative and he wants you to be happy, but he only can sell you what he has, and he never knows what other promos are with the competitors, right? So it's just like, I always say, it's just like buying a car. So if you go to a Ford dealership and you tell the guy on the lot, I want the best, fastest, nicest, cheapest car, he will give you the best that he has. And when you're happy and you drive off the lot, do you have the best car? Well, you have the best car that was on the lot.
So that gives us a good idea. What I have learned over the years, and I'll just get you to confirm this because I have many of my buyers, oh, I don't want to use a mortgage broker because I'll have to pay them. Just let us know how that works briefly. And
Okay, so we get paid a finder's fee from the lender, and we get paid, it's different from one lender to another of how much they pay us. But it's never enough money to make a change in the decision or the selection of the right product. So my process is that once I review the applications, usually there's a few products that are suitable for that client, and I just present them. Right, this is the fixed version, this is the variable version, this is the line of credit version, and each and every product has different interest rate and features associated to them, and it's really about finding the right fit. It's really to have a discussion with client about what is the right fit for that client, for their for their family size, for their plans. Are they planning to become investors? Are they planning to move? Are they pregnant? Are they gonna go and have three more children and need a bigger house? So they need flexibility. Are they moving from one province to another? And there's all those. We really do a deep dive in the section of getting to know our client and what their plans are, and
Mhm.
then we can offer. And from those offers, the client choose. And once the client has chosen his lender and the mortgage fund, that lender would pay our fees. There are a few situations where fees are not paid to us by the lenders, and those are being disclosed to clients ahead of time, like
Yeah,
construction loans or B-side lending or private lending. That there's all kinds of products like that. They're very niche products, and usually the people that get to deal with them, they know about it. Like if somebody's an investor and it's his unit number 10 and is going to be lending because, or alternative lending as we call it, because they need more flexibility on debt ratios, well, that mortgage is going to be a little bit more expensive and it's going to have a fee attached to it as well. But those people, they already know, they already
they do.
expect that.
They do. This is
They're
that's
not
this
surprised.
question was for your average, home buyer.
Yeah.
So we'll save the rest of the deep dive into mortgages for our next video, but I'm going to ask Manny a couple of questions. Like, for instance, what made you decide to become a mortgage broker?
I, well, mortgage brokering is not something that you grow up as a kid and it's like, oh, when I grow up, I want to be a mortgage broker. No, nobody does that. No, everybody wants to be a firefighter. They want to be a police officer, right? Nobody wants to be a mortgage broker. You kind of stumble across. I actually immigrated to Canada 13 years ago as a nurse, and I used to work in a hospital. And between me and my wife, we had some discretionary income left over, so we started investing in real estate, and real estate has changed the trajectory of our family, hands down. And at a certain point, as we were growing our real estate portfolio, uh, I got stuck because at a certain point, the mortgage broker that I worked with told me, "Well, Manny, you're already too leveraged. There's no more money for you." And then I found another mortgage broker by accident in a networking event, and he was laughing at me because I said, I don't want to do business with you because I'm tapped out. There's no more money for me." And he was laughing. He says, "Manny, there is no such thing as no more money. There's always more money. You just need to learn where to find it." So that was a head scratcher. So I started learning, where can I find more money to leverage a bit more and increase the portfolio a bit more? Started working with that guy. After I had no more money, funny enough, he found me money for a few other purchases. And then I, I realized that I need to learn that money part. And I started studying about mortgages and how they work and lending and whatnot, and fell in love with what I can do for myself. And then I found myself advising everybody around me, like people, Manny, how'd you do that? So you do this, you do that. You can approach it from this direction, that direction, but mainly how to get those funds. And I found myself becoming giving mortgage advice without being a mortgage broker. So okay, that's silly, right? So I went and I got my license and my certificate, and I'm licensed in two provinces, in BC and Ontario, and became a mortgage broker.
Okay, well,
That's
that's
how.
a good way to become a mortgage broker as opposed to a firefighter or astronaut or what have you. Okay, Manny, what would you say was your biggest struggle becoming a mortgage broker?
Um, the biggest struggle, well, there's a lot of big struggles. Becoming an entrepreneur or a business owner has a lot of struggles associated with it. Um, I think it's conquering your own mind, right? For me, going from being somebody that used to work on a paycheck, right? I knew that I'm working X amount of hours. In the end of the day, there's X amount of money. The income comes into the account, within 2 weeks, and it's very simple and easy and comforting. So becoming a sole proprietor, now we're incorporated because we grew so much, but becoming a business owner, um, it's a different mindset. It's to be willing to work today for, reaping benefits, 3, 4, 5 years down the line. And it's finding that faith and believe in yourself that you can actually make it happen. That was a big thing. Um, and it's way harder to be a business. I always say business owners are people that are willing to work like nobody else does, so they can afford the life that nobody else can afford, right?
Well, there you have it.
So, yeah. So
On
that was
that
the
note,
struggle, the business
uh,
owner,
hey,
right? You
that's
just
good
reverse
advice.
engineer it.
Good advice from Manny. So, Manny, when you're not picking up the phone and doing all the things you're supposed to do as a mortgage broker, what do you like to do for fun? Well, within reason,
Well,
like
here's my
activity.
problem. So I don't golf. I don't go boating. I don't go skiing. I don't go biking. I I'm I like writing mortgages. Believe it or not. So when your mortgage broker is playing golf and you can't reach him, call me.
Call Manny.
I'm
Call
I'm I'm
Manny.
here. I'm at the cockpit. I'm here. I'm gonna answer the phone call. I'm gonna answer the text.
Okay, Manny. Is there anything else you'd like to share today?
Uh, you know, it's something that we started talking about is about there's a real struggle today that I see. I see it in the files that land on this desk. And there's real struggle for people to get into the housing market, and it's not a joke. It's real and it's serious and it's a problem, but luckily there's solutions for that. So one of the biggest thing I see is people, they rent and they call me and they say, but Manny, I can afford the payment. For a fact, I am paying rent, right? It's the down payment I
Mhm,
can't
mhm,
figure out, right? Because I can't pay those high rents and still save money for, to accumulate for the down payment. What people unfortunately don't know is that down payments are there. You just need to be creative and you need to be collaborative. And the reason I say that is that we can use gifted down payments from family.
mhm, mhm.
We can bring down payments from parents as co-borrowers on a file. We can carve some equity from a property that person is going to inherit anyway down the line and turn that into the down payment. There are even still, believe it or not, there are zero down payment mortgages. You can still buy a property in Canada. There's a file like that that I'm working on right now in the island, of someone that is going to put 0% down, right?
Wow.
So there is coaching around it, on how, and coaching, not because there's no shady business about it. It's like it's main of the road product. There's the really clear regulation on how to do it, but it requires coaching and it requires changing a little bit of the asset class that people are in, how they invest their money, how much debt they have, how they consolidate that, what their credit score is, and we can teach people how to do that, right?
Mhm,
This guy specifically, he has 3 cars with 3 loans, so he has to get rid of one car, right? And
mhm,
so he's going to sell one car. That car loan is going to disappear. That's going to improve his debt ratios, and will be able to borrow money from another source for his down payment.
mhm,
This is a live file from right now. It is doable. Or I find it a lot of times where I talk to people that are, more of the elderly population, people, 75, 80, 85, and they say, I see the grandchildren and they are struggling so much, right? Those elderly people, if they own their home, right, and they already paid their mortgage many, many years ago, they have a ton of equity in that house, to the point where we can carve a small piece of equity out of that house, make it a down payment for the new condo, right? And the parents are not going to need to pay that mortgage down because it's a balloon mortgage. It's a different product, right? And the kids are going to have the down payment. And between the accumulation of value between those two properties, this is well beyond offsetting the accumulated interest, right? And grandfather and grandmother are saying, we have three grandkids. They're inheriting this property anyway.
Mhm,
Why
mhm.
not help them earlier? A lot of elderly people are actually, and I hear it a lot, they say, I would actually rather give them the money now, where I'm alive to see them enjoy it,
Yep.
where I'm
Yeah.
still alive to see how they can thrive, right?
Yep.
And then their inheritance is going to be $20,000 smaller,
Hmm.
but by then they're going to be well on their way for financial freedom and independence, right? So it is a thing, and I think there's a lot of intergenerational wealth that, dealt with responsibly and carefully, can be used and utilized in a very big way,
Yeah.
right?
Well,
So that's
that's
something I wish
that's
people would know.
that's great advice, and thank you for sharing that. I think it's very timely, as I've
Mhm.
discussed several times about being a generational realtor myself. So I'm going to take a moment to thank my dear friend Manny for taking time out of his day and to share a little bit about his business and himself. So thank you very much, Manny. Appreciate your time.
No worries. It was a pleasure being here.